If you're watching this video, there's a good chance you're watching it from one of these apps: Instagram, Facebook, Threads, WhatsApp. Well, guess what? The parent company, Meta, as a stock is currently on sale more than 20%. I'm going to show you how to buy the stock for even cheaper than the sale price. Wait, you know what? Scratch that. I'm going to show you how to get paid to buy the stock for cheaper than the sale price. This is CG with Quiet Cashflow. And on this channel, we don't do fluff, nor do we do clickbait. We give proven strategies with clear execution. Stick around. I'm filming this on a Saturday, so you may see this on Sunday. Right now, as you can see on the left-hand side, this is Meta stock, what it did on Friday. It got all the way down to a little bit under 600. It was at 595. Now, if you go back over the last 3 months, Meta is down over 22%. So the stock fell on earnings. It fell all because, if you look at this article, it was a $16 billion tax hit from Trump's big beautiful bill. But if we go down here, it says, excluding the charge, Meta will have reported EPS of $7.25 ahead of analyst estimates. Meta's revenue jumped over 26% year over year to a record of $51 billion, topping analyst projections compiled by Visible Alpha. So without that tax hit, Meta, just like the other Magnificent Seven companies, Meta was on the verge of putting out record-breaking earnings. So you must understand, in 2022, during the whole metaverse phase, Meta, they were spending a lot of money on the metaverse, and the street, they didn't feel that Meta was going to get a return on that money. So they drove the stock down big time, even if we go back to the charts. Let's go 5 years back. So if you see here, Meta went from 376 all the way down to, it was under $90, because I remember that. It was like $88 a share. And at that time, I started buying it because I'm like, okay, at that time, the price to earnings ratio, which is basically the metric that determines how expensive a stock is, Meta was trading at a 12 PE ratio. So I'm like, okay, no, I got to buy this stock. And so what the street does is they just chase each other around. What happened is analysts, they'll start putting out projections and saying the stock is not a buy. And so Wall Street will follow those analysts into the grave. They won't buy the stock, and they'll just keep selling it off, selling it off, selling it off. So whenever they get crazy, it's your responsibility as an investor to realize an opportunity. And that was one of the most remarkable opportunities of the market in 2022. Meta going from $88, and it ended up going all the way up to like $780. So that was crazy. And so now on this 20+% drawdown, knowing that nothing has changed with the company is still at the forefront of AI, especially in the marketing space. And now, to be fair, Wall Street, they're afraid that Meta is not going to have a return on their AI spending. The same way, let's say, a Google or an Amazon. Meta, they have to keep spending on AI because they have to be one of the leaders in that space. So to me, it makes sense on why they're doing this spending. But like I say, Wall Street, they chase each other around. So they're not going to get it. And if you're waiting for them to give you the green light to buy, I can promise you Meta will be all the way up over $1,000 a share before they give the green light. Because what they do is they buy after the stock. Well, let me rephrase this. They tell you to buy after the stock has already run up. So don't play their game. And even after the stock has run up so much in price over these years, it's still cheap, especially after this drawback. And I'm going to show you how. If you look at Meta compared to the rest of the Magnificent Seven, the forward PE on Meta is a 20. The rest of the companies, Microsoft trades at a 30 PE. This is forward PE. Apple trades at a 32. Tesla is way out there. They're at a 193. And even if we was to look at Meta from a revenue growth perspective, they're the only ones outside of Nvidia that's growing revenue in the Magnificent Seven over 20%. You know, they're just hitting on all cylinders. So if you want to buy it, you can just go ahead and buy the stock as is. But this is an even cheaper way to buy it. So you know, I sell cash secured puts. And right now, to do a cash secured put on Meta is difficult because the share price is over $600 a share. So now, as I explained in prior videos, you have to put up the money for 100 shares in order to do a cash secured put. So 100 shares of Meta at $600 would be like 60 grand. So I'm not trying to drop that on Meta. But what they do have is a leverage play on Meta, which means it trades at twice the speed that Meta trades at. So if Meta goes up 2%, the leverage ETF would go up 4%. On the flip side, if Meta falls 2%, the leverage ETF will fall 4%. So you do have to be careful with trading these, but here's how I do it in a way to where it's a lot less volatile. So what I do is, if we go to the option setup, this option right here, so let me start with the price. For METU, which is the leverage play of Meta, is trading at a little bit over $28 a share. So really you just only need about $2,800 to do a cash secured put on Meta. But to do the one that I did, if we go to sell and we go to put, and I went a little bit above 30 days out, so that is December 19th. And so what I sold was, I sold the $25 put, meaning that Meta would have to drop another 15% from where it's at now in order for me to have to buy it at $25 a share. In exchange for that, I sold a $25 put over here to receive $100 for it. Now the price has changed since then over this last day, but if you look down here under the Greeks, it says that it's about a 20% chance that Meta will fall to that price by December 19th. And if it was to fall to that price, so it'll fall 15% from the leverage play, which means it will fall only about 7.5% from the actual stock price of 609. So that 7.5% will put you at Meta being about 560, 570. Now, you know how they say everyone has a price? They may not be going in buying Meta right now, but I can assure you, if Meta falls to the mid 550s, people are going to be buying it like crazy on Wall Street. So you want to position yourself now. So if we go back to the option play, you just select this option, and over here, once you select it, it'll show up here. You just press continue. And if we go to my home screen, I'll show you right now how that option looks. So right now the option is valued at $90, which means I've already earned just $10 on the option so far. So I just have to hold this option until December 19th to receive the full 100. Now here's the thing about options. You don't necessarily have to hold it until the expiration date. Let's say if Meta was to go up in price, let's say 5% this week. If Meta goes up 5% in price, this option will go down from being valued at $90 to maybe only like $40. So the difference between $100 and $40, that's a $60 spread, which means the total return would just show $60. So you can take your money and run next week if that was to happen. You don't have to wait until the expiration date to profit on these options. And if to take your money and run whenever you see fit, all you would have to do, instead of going to sell open to open up an option, you just go to buy to close and put in the price that is currently at, review order, and just close it out. That's how you close an option that you sold on, so you guys can know. This is just an example of how you can buy Meta for cheap by selling a cash secured put on it. And let's just do the math right quick on what that would be. So let's say if you did this, you got the $100, it costs $2,500 to buy these shares. So you're putting up $2,500, and in exchange you're receiving $100. If we was to show what that return is, just as an example, so that's a 4% return in just 1 month. If we extrapolate that out over the course of 12 months, we're looking at almost a 50% return for the year. Never forget this. The S&P 500 does about 8 to 10% per year. So you're receiving half of what the S&P does in a year in just 1 month. And remember, when I'm giving these examples, I'm giving them only using one contract as an illustration. You can take this same strategy. Let's say if you have 10 grand in a savings account, earning you, $300 a year. You can take that same 10 grand, put it inside here, do the same exact strategy, and earn an extra $400 a month by doing 4 contracts, which would give you about $5,000 a year. That's how you have to think about this versus that money sitting in a savings account. I hope this brought you guys some value. If you want to take it a step further, I dive even deeper into it inside my one-on-one coaching. Just check out the link below. And we'll see how the stock performs over the next course of this month. But if you enjoyed this video, please give it a like. The likes and the comments, they help build engagement and kick this message out to more people. So I appreciate you guys giving the likes. And I'll be sure to get back with you guys very soon with more strategies. See you in the next video.